Hello, everyone. Today is Friday, January 13th, 2023. My name is Evan. Welcome back to another edition of Stock Market Weekly. This is episode 666. Scary number, but not scary out there in markets. We're going to get to that in just a second. If you're new to this video series, first off, thanks for joining us. Thanks for spending your time with us. Here's how these videos work. We break up our analysis into two parts. In part one, we focus on the important market moves that stand out, look a little bit different or interesting. And then in part two, we jump into the charts and take a detailed kind of closer look at price action and those broader market trends. We're going to try and keep things a little bit tighter here in part one segments going forward. So instead of kind of going through all of the data in a sort of exhaustive fashion, we are going to focus on kind of the most important takeaways from the week. So we're going to omit or sort of leave out some of the data points that just aren't that interesting. Okay, that way we kind of keep the focus on the most important. So let's get into it this week. Actually, before we do, that's right, we have a live YouTube series video that we're going to be doing here with Patrick Walker. Patrick Walker is a great human being. I love speaking with Patrick, and he always has just some refreshing insights to bring on the markets. We've done a couple of collaborations with him. This Tuesday, January 17th, 4:30 Eastern on this YouTube channel. You can find us live. Come hang out, ask questions, and let's just talk stocks. Let's talk about markets and sort of changing gears into the new year. We're going to be doing it with Patrick. So hope to see you there January 17th. That's Tuesday, 4:30 Eastern. Set your calendar reminders. Now, in this week's episode, a couple of things we're talking about. First off is earnings season officially kicking off. We got bank earnings this Friday that started off the action, and really next week is kind of full swing for stocks. We had econ data, so CPI data, latest print did not slow down the rally. We had, if you recall, jobs and ISM data last week. That also, didn't really derail anything in terms of this market rally that we're seeing. Breadth continues to improve. This is something we spent time talking about last week. The uptick in, for instance, stocks making new 52-week highs, but you can go right down the list at your, breadth metric of choice, and all of them have been showing significant improvements in the past week or so. We had almost a one-year low for the VIX. In fact, it might have been a one-year closing low for the VIX. I'm not sure exactly what it finished at, but we'll look at that in part two. And the real sort of takeaway here is, this market feels a little extended and frothy in the short term, but medium term, if you're looking out a little bit longer, it is kind of encouraging. So we're going to talk about that in part two. Now, if we get into the numbers here, you can see everything was green across the board, strongly green. S&P up 2.6%, Nasdaq 4.5%, Russell 5%, and world stocks 3.5%. You can see the 1 month change numbers now all starting to move back into green territory. Not quite for the Nasdaq, but the Nasdaq does seem to be, wanting to play some catch up here. So it'll be interesting to see if suddenly we can find some continuation and, dare I say, leadership out of the Nasdaq. I'm not so sure about that, but certainly a good week for it. If we take a look at the way we slice trends here, so we've got our short-term, medium-term, long-term trend, just very simply looking at some moving averages here. And this is the first time in maybe a year. Maybe we had this in April of 2022 when we had that market rally, or was it June? But we've got bullish alignment here on the short and medium term trends or time frames. The long term, everything's still declining, right? And the 200 SMA is going to take a lot more to get that turning up. But in the short and medium term now, we've got just rising, essentially bull control here over this short and medium term. So that is definitely notable, and we track this every week, and it has been improving. Speaking of improvement, market breadth. So market breadth here this week had 426 new 52-week highs made. That's the highest number that we've seen on a 5-day rolling basis in a very, very long time. The number of stocks at 52-week lows, very low, some of the lowest numbers we've seen in a very long time. So in aggregate, we had, 5 to 1, 6 to 1 highs made to, almost 10 to 1 highs made to lows in the NYSE. This is encouraging. This, needs to improve or stay steady here, right? So we saw a blip of this, again, back in the second quarter of 2022. It didn't last long. I already think this is more breadth improvement or positivity than we've seen over the past year. So this is encouraging, but what I would really like to see next week or the next couple of weeks is just triple digit days for the number of stocks hitting 52-week highs. That to me will just show that there is some consensus, there is some flow into just equities in general, and that would get me more encouraged on the medium term time frame. If we take a look at sector performance this week, again, you can see just some big standouts up here. Consumer discretionary, technology, which has not really been a good leadership sector at all for markets in a long time, and real estate in the top three here, up almost 5% across the board. And on the downside, the three worst performing sectors, utilities, healthcare, and staples. Those are obviously the very defensive, lower beta, risk off sort of areas of the market, and it is great to see them, if you're a bull, in the bottom in the bottom underperformers here on this list. Finally here, IBD industry rankings. Shout out to IBD for being a sponsor of the show and a lot of our content. Check them out with this link in the description of this video as well. But they publish every single day the highest percentage of stocks at new highs in all of their industry groups. And so you can see here, these are some of the most positive or best performing from a flow perspective here or breadth perspective industry rankings across the market right now. So I won't read through all of these, but obviously take a pause. Open these up in your charting platforms and look through these individual stocks. I suspect they're going to look pretty good because they are stocks at new highs. So thanks to IBD. Check out that link if you want to get access to these data tables every night yourself. And with that, we're going to end with part one. We're going to jump right into the charts. Stay tuned. All right, we are back. We have TC2000 open, and we are looking at the S&P 500 cash settled market. Forgot to mention markets closed Monday, or maybe I mentioned it, I can't remember, at the top of this video, but don't forget we do have the long holiday weekend, Martin Luther King Jr. holiday on Monday, so we've got a short week ahead of us for stocks, and of course earnings week for stocks as well in full swing. So here we are, S&P 500 closing pretty much at the round 4,000 number here in the cash settled market going into the weekend, up 2.67%, and very nice follow through thrust over this 3,890, 3,900 band that we have been, really talking about and thinking about and trading against for the past 6, 7, 8 months now. So this, I won't get into full, kind of rant about 3,900, but as viewers, routine viewers here know, this is pretty much my line in the sand that I've been using up and down here as the market has basically chopped in this very long sideways range. And for me, over 3,900 is basically my stance to be default sort of optimistic or neutral to bullish. Below 3,900, I get more, neutral to negative on the market outlook here. And so last week, as we talked about, we closed right at this area here, right at the highs of the week and right into the 3,900 zone, and talked about resolving this big range to the upside. And of course, we said, ideally we get some follow through, we get confirmation, we get price acceptance this week over 3,900. And that is exactly what we got. Very picture perfect here. Of course, Monday was a little bit turbulent. So we started trying to push up on Monday. We failed. We closed at the lows, but then we could not find follow through. In fact, we held really exactly where we needed to. We found buyers continuing to support at the old highs of this range and gutting us back over 3,900. So accepting the price up at these new levels. And then we essentially drove higher throughout the week. We had, of course, CPI data out. And of course, the beginning of earnings announcements and lots of other, catalysts and Bank of Japan and all kinds of stuff out there. But the bottom line is the market continued to march higher in a very sort of 2021 fashion, where markets were opening the session at the lows of the day and essentially finding bids throughout the session and closing at the highs. This is a different type of market action regime that we haven't seen. I don't know if it's going to persist, but it's what we have right now. And, last week we were fairly unanimously in the bullish evidence camp. We talked about the fact that the dollar has just not been able to hold a bid. We talked about breadth improving. We talked about breakouts starting to work and breakouts of these ranges. So I think coming into this week, viewers here should have been pretty prepared for kind of the bullish outlook. I talked about the S&P 500 long position I put on Friday of last week. I continued to hold that throughout this week. I did take some profits here into Friday's close, basically right into this 39.80 print. I did scale some profit off, took down the position, cut it in half, because I do think we are in the short term a bit frothy here, a bit extended, and it shows in a number of metrics. I think the VIX, we'll just jump to it now and then come back to the indices, is one spot here. I mean, the VIX is really getting just kind of taken out and again closing at some of the lowest levels we've seen in the past year at an 18.23. We have not seen that consistently stay for some time. This is historically kind of marked, all these times where you get these violent VIX sell-offs over the past year. I mean, it's easy to cherry pick the charts in hindsight, obviously, but whenever you get these big kind of 4 or 5 day slides, they tend to be points where the market has topped, the equity market has topped, and then you experience some type of pullback. So I'm not sure if that is going to be the case this time or if we're entering some type of new regime. But I would say in the short term, if you've got some profits, don't forget to protect them at times, or at least have your stops in at places. And for me, it was enough to just scale some off here and take some gains off. I still am, net long here in terms of this positioning. And I would prefer, again, my ideal situation, again, getting very tactical into my own strategy, but I would love to see a 1-2 day shakeout here early next week. And I would essentially use that as an opportunity to sort of reload on the long side, provided we stay above 3,900, provided, the market breadth stays intact and all the things that we look at on a week to week basis. So that would be my hope. I don't know if the market really cares about what I hope, but that would be my game plan for this S&P position. And, I should say we didn't look at our quantitative systems in the positioning in the first half of this video, but our short-term quant-based system is very short right now. This market, a lot of individual positions, not the S&P 500, but individual stocks. It is selling short lots of things here into the second half of this week because it is recognizing those kind of extreme, let's call it overbought, to use a word that I don't love, but let's call it overbought conditions. And it is trying to lean to the other side of sort of the froth right now. Okay, so that's the S&P 500, that's the VIX, that's the landscape. Short term, I do think we're a bit extended here. And again, the S&P 500, a big, heavy market cap weighted index, doesn't necessarily show how, quote unquote, extended we might be. But if you look at some of the individual stocks, that will give you, a better picture of sort of kind of where we are in terms of those readings. Now, if we move on here and we go to, let's say, the Nasdaq 100 here and take a look at the action. First off, just look at the buying pressure that has come in here over the past 5 days. Again, not super heavy volume, but still progress to the upside, squeeze to the upside. And now, you can see we're kind of bumping our head right up against this 281 zone, which was the low end of the range from November and December. That's where we broke down from. It was also the upper end of the range in October. So I would expect, the cues to start to have some trouble and some difficulty here as it starts to contend with some of this overhead supply around 281 or so, maybe another % or so higher. But I would expect this to get, a little bit tough in this area. And how it reacts here, whether it pulls back or not, judging the character of the pullback, the magnitude of the reversal, all that kind of stuff is what's going to be important here. And of course, again, we have earnings season that we're going to be in the middle of. So we're going to have lots of individual catalysts and sector in industry catalysts to contend with over the next week or two. So Qs, nice bounce here, just as everyone's looking at, Apple being the next shoe to drop here in terms of the Qs, it just, sparked a nice bounce. I believe we even talked about Apple specifically and how it was down, 6-7 weeks in a row. Everyone's eyes were on this breakdown, and lo and behold, you get just a beautiful bounce here, right at those lows. So Qs, nice move into resistance. Again, short term, got to be a little bit cautious, right? You got to be careful not to buy into the FOMO right now, but medium term, encouraging, right? The fact that we didn't break down from lows, the fact that we did get back up here, and watching and seeing how it reacts up at these areas is what I'll be paying attention to. Russell 2000, again, one of the biggest moves here in terms of major indices, 5.3%, really getting some nice follow through after resolving that choppy range to the upside. We're back again into some stiff overhead area here where the market has failed and rolled over from, and there's probably some, former buyers looking to get out at break even. So again, all of the indices now starting to approach some stiffer resistance, and that's pretty much seen across the board. So that is all of the major markets. Let's take a look at just a couple of others here, and we'll call it a day. Dollar continues to struggle to hold a bid here. So this has been a theme that we've been talking about now for a couple of videos. You can see the dollar index was down 1.5%. Again, that's a big move, and it has been just repeatedly sold off aggressively. I will say, again, this feels like it's getting a little bit long in the tooth. The same thing for the VIX, right? Both of these markets, I mean, you could almost think of them as one and the same in terms of what they do to stocks. VIX goes up, bad for stocks. Dollar goes up, bad for stocks. VIX is oversold, dollar's oversold, from a lot of traditional metrics here. So just again, with all of those things happening, with indices coming into some short-term, medium-term resistance areas, that's kind of, the ingredients here where I would love to see, a couple of days shakeout here, maybe a move back down to, 39.20 or so, and then see if the buyers can kind of step in and really kind of tell us that if we're in a new regime or not. So those are kind of the clues I'll be looking for. Gold continues to rip higher here. This is just, got to be one of the fiercest moves I've seen for gold in a very, very long time. 19% in 2 months. I mean, that is a big move off of the lows here for gold. Traditionally, or, by all traditional standards here, pretty extended in short and medium term, but right now that is where the rotation is happening. Silver a little bit less so. You can see it's kind of just more creeping sideways here, and kind of grinding a little bit. I mean, still from a percentage basis, up 34% again in 2 months is a huge move. It's just not quite going as vertical as gold is right now, and I think that's a good place to end it here. So lots happening, as same as last week. Let me know your thoughts. What are you thinking about this market? Do you believe in this regime change, or do you think this is just a temporary squeeze here, and we're going to roll over from these nice round 4,000 numbers and the nice round resistance in the Qs and so on? Leave a comment below. Let me know what your thoughts are, and don't forget, next Tuesday, this coming Tuesday, check out that live stream with Patrick and myself on our YouTube channel. If you got questions, come ask them in person here, follow up, and we can talk about markets and where we see things going. So that is it for me. Have a great long weekend, and we'll see you back here next.